The South African economy giving me mixed signals. I mean, the consumer, on the one hand, pushes retail sales up by over 6% last month, I think it was. But on the other hand, we get an interest rate cut from Jill Marcus and her team. And this morning we see the figure of the private sector credit extension being much better or rather worse, depending on which way you look at it. Let's call it higher than expected. In the Joburg studio is Leon Myburgh, Sub-Saharan Africa Strategist at Citi. Leon, thanks for joining us this lunchtime. Tell us about private sector credit extension. Who's extending credit? Or demanding it, rather?
Yeah, well, it seems to be a little bit, across the board. We've got demand from both households and corporates. In both cases, the credit extended to these sectors increased. Households, it went up from 7.4% to 7.7%, and credit extended to corporates increased from 9.3 to 9.9%. So, it's sort of across the board. But, the question, though, is when you start drilling down into the detail of where this credit is going, that you start to maybe see a slightly different picture. And this is where
what is that different picture? Sorry.
Well, yeah, what I would highlight there is the role that the investments played in the data this morning. We saw that the credit extended for investment purposes increased up to from 11.3% to 16.7%. Now that's quite a big jump, and it's a reasonably significant component of the corporate credit. And once you strip that out, in fact, the activity seems relatively subdued because mortgage advances, which is important for credit to corporates, went from 1.7 to 1.1, and then the other more important, the most important borrowing by the corporates is in other loans and advances, and that declined from 15.3% to 12.8%. Now, the reason why we draw that split is that when the central bank looks at these data, they prefer to look at a measure which is excluding bills and investments as well as adjusted for securitization. I won't go into all the detail of that, but that's a measure that they look at. And then when you look at what happened to the growth number, it was actually very benign. It went from 7.9% in May to 8% in June. So the increase, instead of that 40 basis point jump from 8.3 to 8.7, was in fact much more modest. So, and these are the types of indicators that sort of show the underlying economic activity and what's going on in the corporate. So the underlying data from a corporate point of view was relatively subdued.
Tell me about that figure that you gave, 11.3% up to 16.7% growth in demand for credit for investments. Who is pushing that? I mean, that's a massive move. It's sort of around about a 45% increase from the previous reading. Who's behind that?
It is, but the reason why these numbers are excluded is because it's primarily the banking sector. We're not talking about, I mean, the important one from an investment point of view is really the other loans and advances. That's the unsecured borrowing done by corporates. This investment, there's two categories that the central bank excludes. It's investments and bills, because these are the types of borrowings that typically go into the banking sector. So, and hence why it actually typically gets excluded from a broader macro point of view. And I wouldn't overemphasize the importance of that number. Rather, one should be looking at other loans and advances, because I mean, we've seen much talk about that in the household sector, and because this is the unsecured borrowing, and the risk is this creating increased risk for non-performing loans in the banking sector. But from a corporate point of view, that is the important sector, because that is a section which goes into business expansion.
Let's have a look at the picture as a whole now. Pretty benign stuff. I mean, I remember the days when I used to report on these figures, and they were sort of 26% increase in PSCE on a monthly basis. We're not going to see those for a while, I don't think. But overall, what is the health of the corporate in South Africa? What is the health of the household in South Africa as a sort of a snapshot, given these figures?
Well, in essence, they're relatively benign numbers. So you would expect that. I mean, we know that the corporates have got relatively large cash balances. Credit extension to them is slightly stronger than going to the household sector, but certainly not at a worrying level. So you would argue that you wouldn't be worried about the corporates. From a household point of view, the key issue is, we look at debt relative to disposable income, and what determines disposable income is employment as well as wage increases. Now, certainly, if you rewind 6 months, we were seeing, some, maybe it was modest, but there was some employment growth taking place, and we saw and are still seeing relatively modest real wage growth. Now, insofar as you have numbers like this, credit to the household sector at 7.7%, it probably means that your debt to disposable income in more recent readings is relatively unchanged. That's something that will give the central bank comfort. I mean, I think they would prefer to see that decline. Certainly because at around about just over 70%, that number is still relatively high by historical standards. But the trend has been for debt to disposable income to decline, and that certainly will give them comfort.
Okay, so yeah, we're not. Again, I say it's sort of mixed picture we're getting out of the South African economy, but it certainly seems as though Joel Marcus and her team did have sort of prior knowledge or an indication of what this number would have been, and felt it justified to cut interest rates. Leon, thanks so much for your time this morning. It's Leon Myburgh from Citi talking about the private sector credit extension number released this morning.